Yeah. Hey guys, happy sip day.
Happy
What's
sip
up?
day.
So what do we got going on this week? I hear we want to talk about insurance.
Yeah, life insurance. We'll talk life insurance, Robin.
Yes. One of my
Uh,
favorite topics.
well, fitting for me, right? I got the kid's background behind me. So life insurance is probably the most commonly talked about discussion we have with young parents. Like that's usually the first time that that comes up because if you're a single individual or married and don't have any children, you likely don't have anybody financially dependent on you. So my kids being financially dependent on me, the purpose of life insurance, or the primary purpose, I should say, is if someone is financially reliant on you and you can no longer generate an income financially provide for them, then you need life insurance. So it's not really like a question of like, do I want this or like a preference thing. It's if you got minor children in your house or if you have like a disabled family member that's financially relying on you, you need life insurance to protect that person. Because if not, they effectively become somebody else's problem, an other family member, the state that you live in. There's really not good scenarios there. So I think kind of a responsible thing to do as an adult, if you have people financially reliant, is buy life insurance. Now, if you buy that argument,
Very well agreed. And it's funny that that is when it usually comes up, but there's also so many different scenarios that life insurance can play importance in a financial plan. But generally speaking, is when the first child comes in about and you're starting a family. And then we often ask, well, what type of life insurance? Is it going to be permanent or temporary, which is term life insurance? There's various different ways to go about it, things to think about. The simplest way is if you want to go the longer route for the cheapest, term life insurance is generally going to be the way to go. And that's usually where we start with most families. So, Joe, I know you're going through a case right now, so let's talk through that a little bit more.
yeah, yeah. So I use the child example before. It's like you said the word term nav. That's like a temporary period of time. So my goal as a parent is I want my children to be temporarily financially reliant on me. Like that would be my goal is that they reach a point where they're no longer relying on me. So there's a period of time, let's say 20 years, that I need the insurance to cover them because I'm not going to ask my 7-year-old to go get a job and provide for his family. Like it's not something we're doing. So let's say 20 years is a term period. So my goal is I want to waste money for 20 years. A term policy basically means I'm taking money, flushing it down the toilet. I hope not to die in the next 20 years. Like my hope is I waste money for that 20-year period of time. So the case I'm working on now, it's a young couple, and what they had talked to us, they just had their first child, a daughter, and they said, "Hey, we know we need life insurance, so we're good on the term, but we also don't want to flush the money for 20 years. So we've heard like maybe we want to have permanent insurance as part of that." So the conversation I was having with them is, hey, the first part is the need. You need the insurance, 20-year period of time, get your daughter old enough to be able to, provide for herself, go to the workforce, etc. You might want permanent insurance because there's some advantages to permanent insurance. Number one is it's going to pay a death benefit. So the money that you're paying into it, if you maintain the policy through your life, you're going to get the money you paid into it effectively back, right? So it's going to pay a permanent benefit to somebody. Now that's not going to benefit you as the policyholder or me. I own permanent insurance too. I'm going to get no benefit from my personal death benefit on me on my permanent life insurance, but it's going to go to other people, spouse, children, business partners, those type of things. So it's going to pay off in that respect. The other reason you might want it is if you have significant investment assets and or you have high income and you want to accumulate cash inside of a life insurance contract. One of the benefits of permanent life insurance is the growth on the cash value is not subject to current income tax. So kind of once you've done all the other stuff, and this client actually asked me like, "Hey, shouldn't I do a Roth first?" And like said, absolutely. You want to do the Roth first, 401ks, HSA, some of these other benefits. But then once you've kind of checked all those boxes, permanent life insurance and the cash accumulation inside of that is a tool that's available for people with high assets or high income to be able to use. So now the case I was working on, I kind of split it between like the needs and wants conversation,
Hmm.
right?
Yeah, that's really good. And because once you know that the client has that desire to say, hey, I don't want to just flush the money down the drain. I know probably not going to die in the next 20 years. Then you can ask the question, well, what's the best vehicle to actually uh, accomplish the goal of having permanent life insurance while possibly having a benefit from the cash value of that policy. So there's different ways of going about permanent life. It's whole life insurance, universal life insurance, and then within that universal life side, there's different types of universal life policies. There's a second to die policy, which means with the first spouse passes away, the death benefit doesn't get paid out until the second spouse passes away. That's usually for legacy planning. And then there is traditional universal life, and then there's variable universal life. So my next question usually would be, what's the risk tolerance of this client? Does it make sense to be something where it's more steady? You know exactly what you're putting in. You know pretty much what you're going to get in interest from the life insurance contract. That's typically a whole life. Or do you want to, if you have high income and you want to build that asset base and make it an investment vehicle as well, then you look at the universal life and the variable universal life as ways to improve that, like Joe was saying, growth while you're not getting taxed on that growth like you would be in a taxable brokerage account.
So question, let's say I'm at the point in my life where I have a 20-year term policy. So if 5 years in, I decide that, hey, I would rather have permanent coverage, am I able to convert that policy? Do I just have to wait until it lapses? Like, how does that work?
Yes, good question. So most times that insurance policy could be converted to permanent coverage. Personally, Robin, I did exactly what you just described. So I bought term insurance policies that later on I ended up converting. The downside or the upside of doing that is you lock in the coverage from when you first bought the contract. The downside is if you think you have a permanent life insurance need, the longer you wait to go convert to permanent or buy permanent, just the more expensive it gets. Because
Yeah.
every year that we age, we all get a year closer to death or mortality. So it's more, the insurance companies know that. So it's more expensive to insure somebody 5 years from now than it is today. So you could do that, but the downside is if you know you're going to have a permanent need, the longer you're postponing it, the more it's effectively going to cost. Good question. And then now to the
That's
point
it.
you were making, the case that I'm working on, it's risk-taking clients, entrepreneurial, comfortable investing in stocks, but concerned about, hey, if we have a term policy, it's kind of like renting an apartment. Like I'm not building any equity in that over time. And then, the money's going to effectively somebody else. So that's where I would say it's unusual for us to use permanent insurance in that case, but given the profile of the client, that's why we're looking at kind of a combination of term and permanent insurance.
Yeah, great stuff.
Great stuff, guys. So if you guys are interested in hearing more about term or permanent insurance, please reach out to your financial advisor and your certified financial professional. Have a great day, guys.
Thank
Thanks,
you
Robin.
guys.